Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. The euro has not yet managed to break, even on a daily close, below the support level at 1.1632, ahead of today's US employment data. The Marlin oscillator has spent the last 3 days right at the border between trends, clearly signaling neutrality. Yesterday's ADP private sector employment data showed an increase of 54k jobs against a forecast of 73k. The numbers don't diverge much. Similarly, today for non-farm payrolls, we expect data to be around the estimates of 75k. Is this a good result? Yes, it's a good figure, especially considering that since the start of the year, or since Q4 of last year, competent authorities say there have been month-to-month upward reversions of about 60k per month for non-farm payrolls. We believe that major players have already digested the whole labor market picture, now viewing it as not weak, but weakening. If we assume market participants refrain from speculative action, the single currency could continue sideways until the Fed meeting. On the other hand, the euro's gains over the past 6-8 months have largely priced in a double Fed rate cut, and even a non-farm result just a bit above forecast could put pressure on the euro. This has been our main scenario for months, so the euro's first target is 1.1495, the June 5th high. On the 4-hour chart, price has reached the MACD line and the balance indicator line. It's a red line on a chart. The Marlin oscillator signal line has reached the 0 line. The situation is completely neutral. In any case, it's uninformative and calls for just one thing: wait for the news. The range between 1.1632 and 1690 appears to be an ideal area for waiting for those releases. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Gold is trading around 35.57. Above the 7-8 mirror level, above the 21 SMA, it's a sign line on a graphic, and above the 61% Fibonacci level, with a recovery after reaching the low of 35.13. Gold could reach 35.70 in the coming hours. Moreover, if bullish strength prevails, we could expect the price to reach even level the 8-8 mirror at 35.93. Conversely, if gold falls below 35.46, we could expect a further bearish movement, so the instrument could reach 38 Fibonacci retracement around 35.37, or 23% Fibonacci level around 35.30, and finally 6-8 mirror level around 35.15. Data from the United States will be released during the American session, which could generate strong volatility for gold. We should be attentive to the release of the data. and it is likely that if the news is favorable for the dollar, we could see the gold price fall toward the 35.30 or even 35.15 levels. If the gold price reaches 35.70, where weekly resistance is located, it could be seen as an opportunity to sell. However, if the price breaks above this level, it is more likely that the price will reach its high of 35.80 or even reach 35.93, 8.8 mirror level. The EURUSD indicator is showing a positive signal, so any pullback in gold in the coming hours will be seen as an opportunity to add more long positions. That's all for today. See you online soon.